Again, let's get started. So again, my name is Dave Wise. I operate the SPY Super System Software Trading Room, which we use the SPY Super System software, which we'll talk about today and show you today, show you how you can get it if you want it, and the option room where you can join if you want. So we'll get started. Okay, first thing I have to do, of course, is the disclaimer. All signals and trading opportunities we provide here for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, if you have any questions along the way, I'm going to leave the question box open here. So if you have any questions about any of the material we're covering, just pop your question in there. I'll try to answer it. If I can't, if it's something I can't answer relative to purchases and stuff, etc., Rory would be the fellow you'd want to call. He's at 786-732-4656, and this would be the number you where you'd reach him. I'll put this back up again at the end in case you have any questions on this. All right, so we'll get started. This is just a graphic of the alert service. We'll talk briefly about the alert service a little bit later, but it's called the Compass SMS text alert service. The SPY Super System that we have now on the that I run on Thinkorswim, which, by the way, you don't have to trade on Thinkorswim, but that's where the indicators are. It's called the SPY Super System. It used to be called the Compass when we first started. It's been tweaked since then and improved. It's now called the SPY Super System, but I still call it the Compass SMS text alert service. And these are trades that come directly to your phone through SMS. And I'm on the alert service as well, so I know how long they take to get to your phone, usually 5 to 10 seconds. Okay. And if you've heard my webinar before, you've seen this, but I'm going to go over this one again. This is really important. A market, what drives the market is the question here. A market consists of many small retail traders and tens of millions of them. I mean, I'm a retail trader, and I imagine most everybody in this room is a retail trader. And these are us. We're represented by these little marbles. And the important thing to understand is when we're in the market pretty much by ourselves, just trading, you get a bunch of chop and chaos. You're not getting any kind of a trend. This big marble here, this is the institutions. This is what moves the market. Now, institutions can be in the market. Some can be buying, some can be selling. So they're not necessarily pushing the market in any direction. But once there's enough volume and enough buying or selling from a group of institutions, that's when you get your market moves, and that's what you want to be able to identify. That's when you want to be in the trade. Now, the institutions are made up of 4 groups. They're made up of the investment banks, which everybody's probably familiar with. Bank of America, Morgan Stanley, JP Morgan Chase, all the big banks. These are a major portion of the institutions with billions and billions of dollars to trade. Now, they're also made up of hedge funds. There's hundreds and hundreds of hedge funds. These are more big players with billions of dollars. I mean, they have big dollars to invest and trade in the market. And then you have a group that a lot of people forget about, which are pension funds. Pension funds would be police pension funds, fireman pension funds, state worker pension funds. Again, very big amounts of money, large amounts of money to trade with from those. And the last thing would be mutual funds. Mutual funds, the last part of the group, that's T. Rowe Price, that's Vanguard. Again, well-known, big institutions that can trade and push a lot of money into the market. All of these together make up the institutions. This is what we're looking to determine if there's enough of them that are pushing a trade in one direction or the other so that we can join in them. Right? So these is what move the market. We do not. When the institutions are not pushing the market in any particular direction, and we're just in there with retail traders, we don't want to be trading. We do not want to be trading because all you're going to get is chop and chaos, and you're not going to be able to make any money. We're taking our money when we win, by the way, from retail traders. We're not taking it from the institutions. We're following the institutions, basically just following in whatever direction they're going, and we're taking advantage of that. Okay? So that's what drives the market, and that's what we're trying to find out, is how in the world can we see what the institutions are doing, and that's what the SPY Super System does. Okay, kind of a little bit off topic here. It may seem off topic. This is a blackjack table. If you've ever been to a casino, this is what a blackjack looks like. ace of spades, jack of spades, doesn't have to be that, but any high card with any picture card with an ace, and these couple $100 chips. So this is a blackjack table. And the reason I've got this in here, I thought this was a good analogy. When you tell somebody that you want to become a trader, or you're trading options, or you're trading stocks, one of the things they're always going to say to you, and from your friends, your family, they're always going to say, you're just this gambling. You can't beat it. It's fixed. It's rigged. You can't win. All right. And in some aspects, they're right about that. But the reason I've got this analogy in here is when I was much younger, very young, I made my living playing blackjack in casinos as a card counter. I played in Las Vegas. I lived in Las Vegas. I lived on Sahara Boulevard, and I made my living out there playing blackjack. And the reason I was able to was, if you can, I did what's called card counting. And that's a little bit of a misnomer. You're not actually counting individual cards. You're keeping track of the cards that are removed from the deck as the hands are played. And as more and more small cards are removed from the deck, which would be the deuces through the sevens, if there's more of those that come out of the deck than big cards, it swings the advantage to the player. And when more big cards come out of the deck and there's more small cards in the deck than there should be, the advantage goes to the house. So what I did was I kept track of little cards as they come out, big cards as they come out, and I kept a count of what that was, right? And by doing that, I knew when I had an advantage over the casinos, and so I'd make larger bets, play more hands. When the casinos had the advantage, I'd play one hand and I'd play minimum. That's the mathematical edge I had over the casinos, right? And the reason that this is similar is trading stocks and options is very similar in that without knowing what the institutions are doing, the trader has no edge. So in essence, they're gambling. So both blackjack card counting and trading stocks and options, both of those require discipline and emotional control. This is the key thing here. You can have the best system in the world. If you can't trade and keep your emotions out of the trade, you're going to end up losing. You've got to have discipline and emotional control. You've got to follow your strategies and your methodologies, and you got to be able to do it without letting your emotions take over. This kills a lot of retail traders right here. I consider the SPY Super System software that I'm going to show you, this is my card counting system as far as trading is concerned. It gives me an edge over the other traders, allowing us the ability to become consistently profitable, right? And the SPY Super System software, in conjunction with identifying the best high probability trades, can lead to consistent profits. In other words, there can be several stocks that have institutions driving them. And my job and our job in our trading room is to identify the best of those. If you've got 5 or 6 really good looking stocks that our institutions are driving, technically you have to look at it and try to find the best one that's going to give you the best return for your buck on those trades, right? So that's what the SPY Super System does. So that's why I have this analogy in here. All right, so in the room and the alert service, I have a couple of fairly simple rules to trade by. We trade the best and we skip the rest. Seems fairly clear, seems fairly obvious, but we want to trade the best trade setups we can find. But we want to skip trade setups that aren't the highest probability ones. We don't want to take mediocre trades. And this is really important because the trades that you skip, that you would have ended up losing money on, are just as important as the trades you take. So we don't take a lot of trades. We're only taking the very highest probability trades, and we skip a lot of trades that may look good on paper, but we don't have the criteria that we need to line up to take that trade. I have a very specific criteria that we use for getting into trades, either both on intraday and for swing trades. They've got to meet these criteria. If they don't, we skip it. Another thing that I mention in the room every day is our objective is not to make trades. Our objective is to make money. That would seem obvious to everybody, but a lot of traders, when they're sitting in front of their computer and they think that they're a trader, or they want to be a trader, they feel like they need to have a trade on all the time. Got to have a trade on. If I'm sitting in front of my screen for an hour and I can't find a trade, I'm going to find something I want to trade. So what you do is you start compromising on your criteria for taking trades. Start chasing trades, start taking trades that are mediocre, and it's going to kill your account. So again, our objective is not to make trades. Our objective is to make money by trading the very best trades that we can find. Okay, maintaining discipline is critical. And when I say learn and follow the process, there are specific criteria that you need to have to get a trade that's likely to be profitable for you. You've got to learn those, and then you've got to stick with them. A lot of traders, one of the big mistakes they make is if they take a methodology that works, but they have a couple of losers, they immediately start looking for something else. They start looking for, they'll go to X, or they'll go to Wall Street Bets. They'll go to any sites that they can see, or any place where they can read. They're looking for help to try to find a stock to trade because they lost a couple of trades. And so they jump from one method to another method to another method, getting a couple of wins and then losing and giving up, getting a couple of wins, losing and giving up, and they bounce around forever, and they eventually give up and blow up their account. So learning and following the process and maintaining it. Once you know how to do this, you want to make sure you follow it. And remaining patient is the most key thing here. Wait for the trades to come to you. Don't rush into trades just because they look good. Wait for them to come down to a support or a level and bounce, or whatever the criteria is we happen to have for that trade. You want to remain patient. So we do a lot of watching. We do a lot of watching in the market. All right. And as a profitable trader, we need an edge over all the other retail traders. We have four. The biggest edge here is our SPY Super System software. This identifies when the institutions are in the trade and when they're not. If my SPY Super System software is telling me that the institutions are neutral, in other words, they're not driving the trade, I'm not going to take the trade. They've got to be in the trade. Okay, I'm not going to go in there unless they're in there. I want to be trading with the institutions. I don't want to be trading when the institutions either are against me or aren't in there at all. We trade relative strength and relative weakness. This is something an awful lot of retail traders overlook. And this doesn't mean RSI. Please don't confuse this with relative strength index that you can put on your chart. Relative strength, relative weakness is comparing the stock that you're looking to trade and comparing how it's trading against the S&P 500 or the Qs right now. How is this stock trading? If the SPY is moving sideways and down, and your stock's stacking green candles, it's got relative strength, right? Anything that was green today, by the way, had relative strength. Anything that was a good, strong stock today had relative strength. The problem, of course, is the market was in a downtrend. So if you're taking stocks with relative strength today, they've got to carry all the load themselves because they had no market help. But that's how you find relative strength and relative weakness. Compare how your stock is moving versus how the SPY is moving. On the 5-minute for intraday trades and on the daily chart for swing trades. Then we want to trade with the market trend if there is one. I took several trades today, all bearish. I took all bearish trades. And because the market trend was down, it's easier to follow a trend than it is to fight it. So I was looking for good short setups today to take advantage of that. And then last one here, this is really important. Buy near support, sell near resistance. Please don't chase stocks when they come running out of the gate in the morning and keep stacking green candles. That is FOMO. That's fear of missing out. You jump on a trade as it moves up in the morning because as you watch it, you're getting some emotion here. You feel like I'm losing money, and eventually you crack and you buy it. And more times than not, what happens is you're getting it right near the top and then it reverses down. What we do is we watch that stock and we identify it as a potential long. We look for a support level on it on the 5-minute chart. When it comes down to that support level and bounces off that support level, now we're getting in. We're getting in right at a nice support level. We have very limited downside risk at that point. When you're chasing it up, you've got very, very high downside risk if you have to wait for it to come back to support. Right, so those are the edges that we have over other retail traders. Okay, this is we used to be called the Compass system. It's basically the SPY Super System, and I've told you what this does. It identifies when institutions are in the trade and when they're not. It looks at very complex amount of data to determine if they are or not, and then it identifies them by putting, and you're going to see put these colored lines on the chart to identify when they're in and when they're not in, right? And the fact that it's visual like this for new traders, this is really a big help, because if you're trying to read whether institutions are in the trade or not by looking at price action, it takes a lot of time to learn how to be able to do that. But with this, it's going to be obvious to everybody, right? So we'll show that and we'll talk about that. So this is how we get an edge over other retail traders. We're only taking trades that are being driven by the institutions. We're trading stocks that have relative strength or relative weakness versus the SPY or the Qs, and we trade in the direction of the overall market. trend. Those are the three. If you can do that, you're going to edge over of about 90% of the retail traders in the world. How does this give us an edge? Our trades will be supported by institutional buying and selling. This is a big, big thing. It's a big deal. Stocks will be outperforming the index, the SPY or the Qs, and they'll be moving in the direction of the overall market if there is a trend. That's our edge over other retail traders. We do that by looking at the SPY super system. It tells us if the institutions are in there or not, and then we use other technical setups to find the ones that are the best. Okay. I want to kind of just mention this about the SPY super system software before we get into it. It's important to understand this. I'm going to go over the results that we've had in the room over the last 3 or 4 years. And they're excellent. You're going to see 85, 90% win rates most of the time. 84, 83, 82, 86. Very consistent winning months after month after month. But it's important to understand that this isn't a coincidence. The reason this is happening is because we have the SPY super system software. I do, and I have this presented in the room every day. If you're in the room, you'll see the chart with the SPY super system on there, so you can see exactly what's going on. But the SPY super system software is the critical element in finding and trading the highest probability trades. It's this engine that the SPY software, super system software, it's the engine that drives our exceptional results. So when you see these results, remember, this is where they're coming from. This is what's this is the underlying fact that we're able to find these trades. And the ability to identify when institutional plays are driving a bullish or bearish move, and when they're absent, it's the key factor in pinpointing high probability trade setups. And that's the function of the SPY super system software, and it's a critical component. Okay, there's other things we look at now. This isn't we look at other technicals, but this is where it's got to meet these criteria. All right, I do a YouTube feed every day on Rightline Trading. Rightlinetrading.com has a YouTube channel. I'm on there every day at about at 11:30 or so. I go on for an hour, where people can go on there and watch the room. It's just like you're in the room, but it's for an hour. You can ask questions. You'll see all the questions that come in and out of the room. You'll see the charts that we show. We'll talk about trades that we're taking. We'll talk about suggestions that folks have when they see a trade. What do I think about Tesla? What do I think about gold? What do I think about Microsoft? And we bring them up on the charts and we identify whether their institutions are in them, whether they're a good trade or not a good trade. You do this for about an hour. So that's what I do in the room all day, is look for trades for everybody, critique trades for everybody that everybody's using. We have some excellent traders in the room, several professional traders, and a bunch of really seasoned traders. So a lot of people are finding nice trades, and they'll post them in the room, and I'll bring them up. And a lot of the trades we take are coming from members. I just want to run through this real quickly. If you're a retail trader, I want to see if when I talk about these retail traders, the most common retail traders make. What's the most common mistakes they make? And I've made all of these, but I did a video on this, and I thought it was pretty interesting. One of the biggest problems, the number one thing, is not considering the current market conditions. It's very important to understand when you take a trade that if you've got a trending day like we had today, and you were trading bearishly, that likelihood that trade is going to work, and it may work for a longer period of time. On a choppy day, when you don't have any direction in the market, much more difficult. You've got to take that into consideration. It determines how much risk you take in a trade, how long you stay in a trade, how quickly you take profits in a trade. Very important. That's the number one mistake. Number two is over trading. This is pretty common. Retail traders feel like they have to be trading all the time. I mean, I know I may take, on an average day, I may take 4 or 5 trades, intraday trades, maybe add 1 swing trade. I mean, I know a lot of retail traders, they feel like they got to have trades on all the time. They're trading 20, 30, 40 trades. There's no way that you're going to be consistently profitable doing that, because you can't manage that many trades. Trading your P&L instead of technicals, this is another common mistake. You look at your P&Ls, how much money am I red or green? Am I up from the trade or am I down for the trade? And then you basically make your decisions as to whether to stay in the trade or not stay in the trade based on what your P&L is, right? So if you get in the trade and it looks good, it looks bullish, it's got good technical setups, you shoot up, you get into the trade, you're up $300, you're happy, all of a sudden it comes down and now you're down $100 on this thing. Now this technical setup is still strong. It still looks like you should be staying in the trade, but now you're feeling bad because you're looking at your P&L. 10 minutes later, you're looking at your P&L, and now you've gone from down 100 to up 150. Now you're green, 150, right? A couple minutes later, the 150 turns into $50. You're looking at your P&L. If you're watching your P&L, human nature is at that point, I'm going to take these profits. I don't want to go red again. And that's a big problem because you're making trades based on what your P&L is telling you, not what the technicals are telling you. Maybe when you're down $50, you should be actually adding to the trade because it's bouncing off support. But that's the problem that people make. I don't even look at my P&L during the day. It's all based on technicals. Trading what you think instead of what the price says. I'm going to cover this in a minute. I'm going to show you a slide on this, trading what you think instead of what your price says, because this is a really sensitive subject with me because so many people were bearish in the market starting in April last year, and they stayed bearish because they thought the market should be going down. They thought that the institutions should be selling. They thought that the tariffs were going to kill the market. They thought that the job layoffs were going to kill the market. So they were trading what they thought the market should be doing. They weren't trading what the market was doing. And they traded bearishly for 6 months and lost huge amounts of money. Not only what they lost trading short, but they missed all of the whole run up in the market. That's trading what you think or what you read about instead of what the price is saying. Being over leveraged, obviously this is pretty common. Too much risk. When you put too much risk, if you're normally trading $1,000 on a trade and you put 4,000 onto a trade, you're not going to trade very well. You're going to be very, very emotional about that because you get so much money at risk. That's this being over leveraged. Not using the daily chart for a swing trade. Please don't take a trade long for a swing if the daily chart's bearish. You're trading against the daily chart. The daily chart is what drives where the market should be going. If you're trading bearish when the market is going up, you don't have any staying power in the trade whatsoever. Turns against you, you don't have a daily chart to lean on. That's important. Not using the daily chart for swing trades. You don't need it for intraday trades, but you need it for swing trades. Lack of patience, we've talked about this. Forcing trades, this is basically related to lack of patience. Attempting to pick tops and bottoms. Tesla's gone down just much, it can't possibly go any lower. Microsoft is hitting an all-time high. It can't go any higher. Yes, it can. And can Tesla go lower? Yes, it can. You've got to wait for confirmations of the topping to have taken place or the bottoming to take place. Don't try to pick them. Not waiting for confirmation to enter a trade. In other words, a trade is breaking down below a support level. You go short, it bounces back up above that support level and continues back up again. You didn't wait for that to confirm that confirmation, that there was a confirmation of that reversal in the trend. And of course, FOMO, fear of missing out, chasing trades up or down early, getting caught at near the high or near the low. All right, so those are the main ones. Now, this trading what you think instead of what the price says. This is what I think is really a really good quote from Stephen Hawking on this. But this definitely applies to retail traders. The greatest enemy of knowledge is not ignorance. It is the illusion of knowledge. When you're trading what you think the market should be doing based on what you've read or what you've heard or what some friend has told you or what you've seen on X, you're trading with the illusion of knowledge. You're trading what you think is something that should happen. You're trading what the market, in your opinion, should do, not what the market's doing. We trade just what the market is doing. That's all we care about. Don't care about any of what anybody else thinks, because you're basically then you're getting a bias in your mind to trade that's based on some random idea that has nothing to do with the price action on the market. So please don't do that. It's the greatest enemy of knowledge is not ignorance. Better off not knowing anything than reading about something and trying to trade something you think should happen. I mean, you always hear this from retail traders. You know, I had to take it off. I was early. I was early means I was thinking it should go down, but the market went up. I was early. No, you weren't early. You were trading what you thought should happen, not what the market was actually doing. Okay, in the SPY super system now, we're going to talk about the setups just a little bit. There's 4 color codes on everything we use. Get green, which is strong bullish. You've got blue, which is a bullish trend. You've got red, which is a bearish, strong bearish, and yellow, which is a bearish trend. That's all we need for colors, and we can tell what the institution is based on these colors. Okay. Now this is the SPY super system right here on Thinkorswim. Now it's important to understand that with the SPY super system, you don't have to trade on Thinkorswim. I don't trade on Thinkorswim. I trade on Tradier. A lot of our traders trade on Fidelity, Tastyworks, Interactive Brokers. You can trade anywhere, but this is where the indicators are going to be put. They're going to be put on the Thinkorswim. And if you don't have Thinkorswim and you're somewhere where it's available, you can just download it for free and buy the software, and Rightline will put it on there for you, and it'll look just like mine. So this was the setup up until about 3 weeks ago. All right, and I'm going to go over each one of these things, but I'm going to show you the newest setup now. But this is what it used to look like, and I think I've improved it. All right, because we're going to go take a look at the new one. This is the updated SPY super system chart layout. All right, it's optimized for clarity and precision. The addition of the 8 EMA, we've added the 8 EMA. It provides improved signal confirmation, trade timing for both entries and exits. Okay, this is it. This is a SPY super system on a 5-minute chart. This is a 5-minute chart. This is what we use for all our intraday trades. We'll use daily charts for swing trades. Down here, we've got the keys to this. This is called the modified Laguerre oscillator. This is an oscillator that has the divergence stripped out. This is just straight, pure momentum. The best one I think that there is, it's basically pure momentum, and you can watch it going from 0 to 100. It goes up and down between 0 and 100. Here's the oscillator. This is the current time frame momentum. For intraday trades, this is critical. This is critical. That tells you what's happening with the market. You see the color changes here? You see red, bearish. You see blue, bullish. You see the switch from selling to buying. This is institutions going from selling to buying, right? Look at the price action when they did that. You see the price action right here when they went to buying right here. That's what we're looking for. So blue and green are bullish, red and yellow are bearish, right? So you can see the market's moving up here. It switches over to selling. Here it comes down. This is telling us what the market's going to do. The multi-time frame momentum is what we use for swing trades. On a swing trade, on a daily chart, the multi-time frame momentum and the current time frame momentum have to line up. They both have to be bullish. They both have to be bearish. Bullish being green or blue, bearish being red or yellow. All right, so we want these to align. If this was a daily chart, they would not align. You wouldn't take the swing trade, right? And this is the long-term trend. This gives us a little bit of help on the swing trades. We'd like to be able to have to trade with the trend if we can. And so that this has the same colors, but it tells you what the long-term trend is. These are your keys right here. And for your intraday traders, this is the biggest one you need to have. Got to know about this one. Right? This tells you if the institutions are getting in and out of the trade. Now up here on the actual price portion of the chart, this is the VWAP. This is the volume weighted average price right here. Okay, volume weighted average price, which is something that every institution uses. VWAP. This is a support or resistance level. As the stock breaks above the VWAP, you can go long. If it breaks below the VWAP, you can go short. If your institutions are going in that direction. Second thing we have on here is the 15 EMA. This is the 15 EMA right here, right? And the white line is the 8 exponential moving average. 15 exponential moving average, 8 exponential moving average. I use these in conjunction with each other. Both of these alone are support and resistance levels along with the VWAP. These are where we want to get into trades when we're breaking above or below these particular levels. And we're talking about the 15 and 8 a little bit, but these basically support each other. When a stock price breaks below the 8, many times it'll support on the 15 and then bounce. So if you're in a trade as it breaks through the 8, a lot of times you can wait for the 15, just make sure it holds before you exit the trade. You don't have to exit right on the 8. It gives you a lot more flexibility in the trades, right? So those are that, and then you've got these pop signals. These tell us when the stock is breaking out of compression to the downside with blue and to the upside. So when you see one of these on the chart and you're getting a break like this, you can see how you're getting a break here, and you go from selling to buying, red to blue. See the stock breaking above the VWAP and the 15 and the 8. You can take it right here. You can take it right here. You can take it right here, and you just ride it up for a couple candles and get out. Okay. And this is what's called the vol trend up. This tells us what the market internals are. This tells us what all the New York Stock Exchange, all the New York Stock Exchange stocks, all 6,000 stocks, basically what they're doing right now is tells you what they're doing based on the amount of volume on stocks that are going up minus the volume of stocks going down. And that tells you what the overall trend is in the market. This was bearish all day long today to tell us that we should be trading short. So this is another indicator that we have on here. All right, so that's your SPY super system that you can buy, put it on Thinkorswim. Right line will put it on there. It's the one I have displayed in my room all day long. And this was I just kind of want to show a couple of trades real quickly. This was a 5-minute trade off NVIDIA. I want you to see this so you can see. Here's the VWAP. So we want to trade this long to this day. Notice the market was up. We want to trade it long. See how it goes from selling here, the yellow and red. This is selling. Here's blue buying right here. This is where you buy it right here. As it breaks above the VWAP and the 8 right there and the 15, you take it right here and you write it right up. As soon as it starts to flatten out, you take profits. That's a very, very nice trade right there. Probably $2.50 a contract on options, on calls, right? That's what you're looking for. This is another one we took on the SPY. This was a SPY trade right here. Again, here's the VWAP. SPY is coming down below the VWAP. The institutions were buying and then they turned to selling. Institutions start to sell the SPY right here. The SPY price breaks down below the 15, the 8, and the VWAP right there. This is where you buy it. See the pop signal? You buy it here, and you just ride this thing down, and it stays bullish. Notice how I'm bearish. You see how it stays bearish? Yellow and red all the way across. You ride this down, and you can get out anywhere you want around here. Notice it popped up and never really get up to the 15. You could still stay in it. Typically for me, if I'm in this trade, I'm going to start to get out as soon as it starts to flatten out. But that was a nice trade right there on the SPY to the downside. Okay, this was, again, SPY to the upside. Here's a trade here. Here's the VWAP. This is 5-minute charts. Here's the VWAP, the pink line. Here's the 8, the 15 right here. I didn't have the 8 on at this point in time, but here's the 15. Here's the institutions going from selling to buying. Yellow to blue, right? They're buying. This is where you take the trade right here. As the SPY breaks out, you ride it up, it flattens out, you take it off. That's a nice trade right there. Again, probably $2.50 per contract on a SPY calls. Okay, and a lot of they don't always go like this. I mean, it can chop, it can go up and can go that quickly. Sometimes you only make $40, $50, $60 on a trade. Sometimes you make 200. Sometimes you lose 20 or 30. But since you're coming in right at the support level like that, if it breaks down, you're going to be out very quickly before it gets too far away from you. Okay. And it's a Tesla. This one we took in Tesla early in the morning. Just another one you can see selling, buying, buy it here, write it up, take it off as it starts to pull back down. Okay, and this was a swing trade. So for folks who can't take day trades, this was the same swing trade in NVIDIA daily chart. Okay, this is you can see the institutions are buying it. Current time frame, multi-time frame, trend, everything is green here. What we were looking for, we were looking for what's called a PBO. We call it a pullback opportunity. Looking for the price to come back to support and then bounce, which it did right here, right off the 15. We took it right here, and we get out right here. Like a 3-day trade in NVIDIA for about 32% profit on the calls. All right, and this was an SMR trade, just so you can see these. Again, you can see SMR went bearish right here. It had earnings, it went bearish, it goes right back to bullish again. It's on a daily chart, so both these have to be green or blue. They're both green, we take them right here, and we're in on the 13th, out on the 15th, 56% profit, 2,000 invested, produced $1,170 profit. And I use 2,000 just as a baseline, so I have to have something to be able to determine profitability results, right? So that was SMR. So I won't go over it more. This was Wendy's. This was another one. Again, see how Wendy's is blue here, and it goes to red. The institutions are selling it. They've been selling the heck out of it on the multi-time frame momentum. So you take it right here. We just took it overnight and get out. Okay, so these are kind of graphics here that are a little funny. This is kind of what a trader looks like who's trading with emotion. He maybe did a FOMO trade. The trade's getting away from him. It's turning around and heading back after he bought right near the high. Doesn't know what to do. Should I take a loss? Should I take a loss? Is it going to bounce back up again? Confusion is in your mind when you're trading emotionally. You're very confused. You don't have any, you have nothing solid methodology that you can trade by when you're doing that. And that's how you feel when you're trading emotionally. Very difficult to trade good when you're emotional. Emotional is very, very hard to be consistent. That's what happens if you don't have a methodology to follow. This is a guy that's got a methodology. He knows he's going to take some losses sometimes, but he knows when to get in, when to get out. He's got all the criteria that he needs. He knows what the institutions are doing. You feel much better about it. You're not sitting there with a bottle of antacids at your elbow every day, trying to calm down. All right. One more thing I wanted to talk about. This is process precedes results. We talked about this a little bit before. This is, again, I'm emphasizing here. Don't be looking at your P&L to decide if you're trading well or not. You've got to learn the high probability criteria, the setups and the methodology to use. You got to learn those strategies, and they got to come before focusing on results. This is what's going to make you profitable. Learning these. Focusing on your P&L is not going to make you profitable. All right. The process comes before the profits does. Right. So first you need patience, then you need a process, and then the profits will follow down after you've learned that. So don't focus on your P&Ls. And now this is we're talking about the process. Here's the process right here. This is the basic process I go through when I'm looking for a trade. First of all, if it's going to be a swing trade, the daily chart's going to be bullish if I'm going long, bearish if I'm going short. On a 5-minute intraday trade, I don't really look at the daily chart. I'm just looking at the 5-minute. For any swing trades, you've got to have a daily chart that aligns with the direction you want to trade. Must have it. You want to trade with the trend, both the stock and the market trend. If you've got, ideally, if you have a market that's trending up, and you've got a stock that's trending up, then you're going to have a higher success rate. If you're going short a stock when the market's trending up, and you're going taking a stock that's got a chart that looks like it's bearish, you can still make money on it because you are trading with the stock direction, but you're not trading with the market direction. So you don't have quite as much ability to have a high probability trade with that. Then we have the SPY super system must align. The SPY super system has got to be telling you that if you're going long, the institutions are in there. Right? You've got to have your SPY super system on the 5-minute chart. You got to have it on the current time frame. Momentum's got to be green or blue for long, and on the daily chart, you've got to have both the current time frame and the multi-time frame momentum. Both have to be green or blue to go long. Yeah. Okay. Then you want to trade with relative strength and relative weakness. Again, if you find 3 or 4 stocks that look good, then find the one that's got the best relative strength for a long and the best relative weakness versus a SPY, right? Because the one that's got more relative strength is likely to outperform the others. So that's what you look for. Then you want to try to enter near support, and if you're going short, you want to sell near resistance. Okay, that's how we find these trades. This is how we find these trades that give us an 85 to 90% win rate. This is the process we go through. Okay. In the room, just so you know, in the room and on the alert service, these are the kind of strategies that we use. Mostly with options. I do some stocks occasionally, but mostly options. Straight calls and puts. Do a lot of those. I mean, that's just a directional trade. I do straddles and strangles. Straddles and strangles, if you don't know what they are, those are non-directional trades. What you're looking for is a stock to make a decent sized move up or down. You don't care which way. They call straddles or strangles. A straddle is a strangle basically has 2 different strike prices. A straddle has one strike price. You buy a put, you buy a call. But they're non-directional, and they're very, very effective because you don't care which way the market moves. You're just looking for a big move. Some of these are very, very impressive. I mean, I had one on coin that I put on coin's expensive. Coin moves a lot, but it was $1,350 a contract to do a straddle on that. All right, I did the what I did. I did the 307.50 straddle, $307.50 put, $307.50 call, expiring tomorrow, and that thing went from $1,350 to $2,450 today on the move. So you can make good money on these straddles and strangles. You're really looking for a stock that moves. You don't want something that's just chopping sideways. We do debit spreads using weekly options expiration. I do time spreads over earning. This is where a non-directional trade We're trying to capture what's called the volatility crush. If you're familiar with what happens to option premiums on earnings, the option market makers jack them up, they push them way up on the puts and the calls because they don't know which way the stock's going to go and they don't know how far it's going to move. We just took a time spread tonight on applied materials. We'll see how that goes. But we have, it's a pretty good win rate. They don't work all the time, but they're very effective. They're very effective, and usually we can make 25, 30, 35% on these things. We do what's called a weekly ATM strategy. This thing is really, really effective if you have the right criteria. It's hard to find the right stocks. We just did one of these on Sophie twice. We did it early in the week and then we did it later in the week because we were able to take a 50% profit both times. But this is the main criteria for this is you're selling puts every week to bring in premium while you're holding a longer dated put further out in time, like out into December, at a lower strike price to protect you in case the stock turns against you. Very forgiving strategy because you can actually buy back the puts if it's going against you, hold the long puts and ride that down. So very forgiving strategy, very effective, but this very specific criteria that you need for this strategy. And I do have videos on all of these things. So we do credit spreads, capture premium. Everybody usually knows about credit spreads. And then we have one what's called the SPY Super System high probability trade setup. So the SPY Super System methodology. This is where we're using the SPY Super System chart to trade the SPY, the Qs, the Russell, right? And also futures, ES and Q, or stocks. You can trade any stocks. But these are all based on a 5-minute chart and they're very quick. They're very quick. And I have a very specific setup for these kind of trades. They have an excellent win rate. 4.3 profit factor is what they get, which is very high. If you don't know about profit factors, 1.0 profit factor is break even. 2 is twice as many wins as losses based on the amount of money you're winning or losing. 4.3 is very, very high. But again, these are trades that I can't post and I can't alert on. These are for individual traders to take in the room. I take them and I call them out when I find them. I did find 2 of them today. I traded. They both worked out very, very nicely. I made probably $100 a contract on the 2 trades I took. Okay, the alert service, just for anybody who's interested in this, it's designed for day trades and short-term swing trades, not an investment type service. Designed for traders who can't watch the market all day. It has the real-time alerts on the highest probability trade setups, the ones we looked at. I'm going to be looking at those, and most of them are going to be swing type trades. I try to put out trades that if you're under a PDT rule, pattern day trader, where you don't have 25,000 in your account, you're going to be able to have most of your trades. You're going to be able to hold overnight, and so that won't impact that. Right, and we take the highest probability trades by identifying institutional involvement, of course, what the market internals are if they're lined up, and then we do some technical analysis on it. That's where they come from. And we're not going to alert on every trade that we take in the room, because some of the trades in the room are very quick. They're taken late in the day, and they may be speculative. But the trades that come out in the alert service are very, very powerful. And again, it has about an 85 to 90% win rate. Equity curve right here. This is just my equity curve from January, based on 2,000 per trade. That's not what I take, but that's what I need to use some sort of a baseline. This is what the room has done this year. July was a big month. You can see July. Then we've had some little, I wouldn't say these are weak. We're making money every month, but it's not going up as sharply as it did in July. But that's still a pretty nice profit, a little over 50K for the year if you took every trade. All right. Now I'm going to stop here and talk about Heiken-Ashi candles, because I know a lot of the folks probably want to hear about these. If you've used Heiken-Ashi candles and you use them in the trading, just kind of pop a yes in the question box so I can see if we've got some folks who are familiar with these. Because I've been using them for quite a while. I find a lot of traders have never really heard of them and don't use them. So we're going to cover them right now. This isn't going to take a long time, but we're going to cover these, and we're going to look at some live charts with Heiken-Ashi candles reversals in them to find potential swing trades. Okay? All right. So again, using this SPY Super System, finding Heiken-Ashi candles with the SPY Super System. All right. Now, this is just a graphic of a chart. It happens to be the British pound, Japanese yen, doesn't make any difference. These are just candlesticks. This could be gold, this could be Microsoft, this could be Tesla, this could be oil, this could be anything. But the key thing here to remember and to learn from these are Heiken-Ashi candles. Heiken-Ashi candles, bearish Heiken-Ashi candles have flat tops. They always have flat tops on them, okay? Flat top, flat top, flat top, flat top. That's what indicates a Heiken-Ashi candle. There's no wicks. And an interesting characteristic of these, because of the way they're calculated, the next candle, whether it's a 5-minute or a daily, always starts in the halfway point of the previous candle. Always starts there. Halfway point, halfway point, halfway point. Always starts halfway down or halfway up the previous candle. But these are bearish. These are pretty big candlesticks coming down. Now, if, for example, you like this particular stock long and you were looking for a reversal, you're looking for a bounce for this stock to reverse back into the original bullish trend and go long, you'd be looking for what's called a Heiken-Ashi reversal. So as this comes down here, this is a bearish Heiken-Ashi trend. And you start getting wicks and tails here as the candlestick turns green. And then you get a flat bottom right here. See this flat bottom? That's a bullish Heiken-Ashi candle. This is a Heiken-Ashi reversal from a downtrend to the uptrend. However, there's a caveat here. It's important. When you get a Heiken-Ashi reversal to the upside or to the downside, the candle that creates that reversal needs to be as big or bigger than the ones that created the original trend. See how big these are? See that? It's not big enough. Now, if you had taken this trade, you'd have made money on it because it moved up. You had flat bottom, wicks and tails. You would have made a little bit of money on it, but this is not a trade I'd take. I'd be waiting for a serious reversal. So it moves up, and then it reverses back down again with a Heiken-Ashi bearish reversal here and here. Here is the Heiken-Ashi reversal that we're looking for. See the bottom? Flat bottom, Heiken-Ashi candle to the upside. See the size of the candle? Much bigger than these. All right, that is what you're looking for. That's a Heiken-Ashi reversal. This is where you would take the trade right there. And there, you just ride this thing up because you're getting, as long as you get flat bottom candles, whether it's a 5-minute chart, or a daily chart, or a weekly chart, this shows you a Heiken-Ashi trend that's bullish. Then you start to get a couple of wicks and tails, and then right back to flat again. This is a beautiful trend. You see how easy it is to spot the trend without regular candles with Heiken-Ashi candles. Once you get to the top like this, and then you start getting wicks and tails, and then a red candle like that, you're out of the trade. That is your Heiken-Ashi reversal, trend reversal right there. That's how you identify it with a big Heiken-Ashi reversal candle for a bullish side. And the bearish side, of course, would be the same way. Okay? That's what you're keying on here. So here is the distinctions of Heiken-Ashi candles and what you need to remember about them. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. This is the most important thing. And you can put Heiken-Ashi candles on your charts. All you have to do is change from candlesticks to Heiken-Ashi. Say, I'll let you do that. Bullish Heiken-Ashi reversals are identified by flat-topped Heiken-Ashi candles, followed by flat-bottomed Heiken-Ashi candles. Bearish Heiken-Ashi reversals are identified by flat-bottom Heiken-Ashi candles, followed by flat-topped Heiken-Ashi candles. Now they don't have to follow one right after the other. You can have some doji candles in between them before you get the reversal like we had on the one I just showed you. But this is the distinctions of Heiken-Ashi candles. Okay, any questions on that so far? Okay. So again, understanding this is just a recap of what we just talked about. Okay, flat bottom candles and an uptrend signal, a strong visual of current trend and strength. Here's what we just looked at. Here's the bearish Heiken-Ashi candles coming down. We're looking for a bullish reversal, but the candle's not big enough. So we wait and wait. Now, if this blue line, for example, happened to be like your VWAP, let's say that was your volume weighted average price, and this is where you were looking to enter a trade or some sort of a resistance level on the daily chart that you're trying to get in, this is where you would take it as the Heiken-Ashi candle with a flat bottom breaks through the resistance level right there. That's your Heiken-Ashi reversal with a compression break. You take it and you start following it up. You get a little red here, but it doesn't come down to your breakout level, and then it just continues right up, and you're getting mostly flat bottom candles all the way up. So there's your trend. Here's what you follow. Then you start getting a little squirrely when it gets up here. You start to get nervous. You're out right there. Right there is this thing reverses to a Heiken-Ashi bearish reversal right there. You take your profits, and there's the profits that you had on that trade. All right, that's what they look like. So we just talked about that. What's the advantages of Heiken-Ashi candles? It smooths out the price action, reducing noise by a lot. You look at 5-minute candles, you're getting a lot of noise. This smooths out the price action. It makes identifying the trends much easier. It improves the identifying the confirmation of trends or trend reversals. This is the most important thing, trend reversals. If you like a stock long and it's coming back down to support, what you want to know is when it bounces off support, is it reversing? Is that reversal confirmed? Heiken-Ashi candles, just by definition, take 2 candles to create 1. So when you get a Heiken-Ashi reversal candle, it is by definition a confirmation of the bounce back into the trend again. Right? And it helps identify potential exits when the candle bodies shrink or the reversal occurs. That's your major advantages of Heiken-Ashi candles. And you can use them, you know, for swing trades. You can use them for 5-minute charge trades, where you can use them whatever you want. All right. Now I'm going to show you a couple of charts. I'm going to go to some live charts, but I'm going to show you a couple of charts here. This is Uber. This was back in 2023. Doesn't really matter. What I'm showing you here is a regular candlestick chart. All right. So you see this gap up, how this thing takes off. Very difficult to decide whether to grab these after you get these big moves. You're going to be very leery. But watch Uber now on May 1st. See, this is May 1st. Let's look at May 1st here on a Heiken-Ashi candle. Here's May 1st. Here's what the price action was coming into May 1st. Flat bottom, a flat top, flat top, flat top, flat top, small Heiken-Ashi bearish candles. Right? Here's your Heiken-Ashi reversal candle, May 1st. This, when you see this on your daily chart, the Heiken-Ashi reversal candle, that's where you take the trade. You just enter the trade right there as it moves up with a flat bottom candle with a big, fairly big size, and you get into the trade, and this is what you get. Gap, you get Heiken-Ashi reversal, and then a Heiken-Ashi flat, Heiken-Ashi bullish, Heiken-Ashi bullish, Heiken-Ashi bullish, all the way up, still getting bullish candles, and then it flattens out. Now these colors, this is TC2000. This is the chart I use. This is a charting program I use to do technical analysis. But this is Heiken-Ashi candles for reversal. But I wanted to identify what you can get. So again, this is the difference between this, and you notice what disappears on Heiken-Ashi candles. See the gaps? No gaps. No gaps on Heiken-Ashi candles. So you can feel confident taking the trade right there, and you'd ride it right up. Right? They don't work every time, but they work a lot. All right, so we're going to look at some live Heiken-Ashi reversals, and give me a second here because I need to run a quick scan on some Heiken-Ashi candles. All right, let me see here. I didn't really have time to do this before the set webinar because I want to do these on today's for today's action, and again I had to get on here right after the market closed, so I'll go ahead and just look at my scan results here. These are my scan results of TC2000. So I'm looking for basically Heiken-Ashi reversal on the daily chart. Right, I'm going to look at some bullish ones first. Bullish reversal on the daily, right? And I'm going to try to find a few of these. So let me bring out my TC2000 chart first, and then we'll switch over to the SPY super system. All right, so here's a SPY, by the way, today. You can see how ugly that is. All right, so here's some stocks that have Heiken-Ashi reversals. There's SPB, right? That was on earnings. That's why it jumped up like that. CF is ADT. So if I switch over to Heiken-Ashi right here, Heiken-Ashi, there's my Heiken-Ashi reversal candle right there after this big down move. But I take it probably not. These are pretty big. This isn't big enough. So I'd have to make a determination on that. There's HUN. That looks pretty nice. SEE, big, huge move here today. In that this is basically what's called the Heiken-Ashi continuation because we already had a Heiken-Ashi reversal here. This is a continuation of that run. And I'm just running through stocks here that meet the criteria. There's Tesla. That's the Tesla short. That's a 2x short. Tells you how strong this is, which means Tesla's been very weak. So we're just looking to see what I can find here. And that's a pretty decent one, QSR. This has been an uptrend. It put in a little wick in the tail. This is a Heiken-Ashi continuation. And remember, today was very, very bearish. These stocks are fighting the move in the market today. See, there's planet right there. There's a Heiken-Ashi continuation, right? Nice Heiken-Ashi continuation of a tracker supply. So these are all good. There's Delta Airlines right there with a nice one. So if I go back to regular candles on these, right here, this is what you're gonna see. There's AIG, there's ExxonMobil. Does that look good, Heiken-Ashi? It does. You see the nice move up, flattened out, getting a Heiken-Ashi reversal candle again right here, or a Heiken-Ashi continuation candle, right? So those are some decent ones. So that's what you're looking for. If we switch to bearish ones, you're probably gonna see a lot more bearish ones here. WVAV here. LDOS, let me switch over to Heiken-Ashi. There it is, Heiken-Ashi right there. Right, here's a continuation pizza to the downside, PZZA. This thing has been in talks to be bought out and not bought out. It's been, you can see the crazy action on it. Not something I would touch. NetApp here with a nice move down. This is a continuation. When you have a bearish trend and then you get a wick and a tail followed by a flat top candle, that's a bearish continuation candle to the downside, right? STX doing a bearish reversal right up high, right up near the very, very high here in STX. Another nice bearish reversal on PNW. It's been pretty bullish. So if we look at the regular chart on PNW, here it is right here. Looks pretty bearish to me. And it's breaking down, and I would think that that would actually be a good one to look at tomorrow for a potential short, except it has earnings on the 19th, by the way, which is next week. Okay. PNW is SLG. So it's like Green Realty Company, nice bearish reversal to the downside. It's been a long-term trend here. So it's been flattened out. This is what would be a good place to get back in again, right there. Look at the regular charts on this one coming down pretty nicely. So now one of the things you want to look at, again, how we use the SPY super system on this, because this is important. When you think when you want to take a trade, and I switch over here to the daily chart. All right, so I switch over to daily. And so this is my SPY on the daily. Let's take a look at SLG on here. Is SLG a good short? It looks good with the Heiken-Ashi candles. What's it look like here across the board? This looks beautiful as a short. You see how much selling there is here? Current market, current time frame momentum, multi-time frame momentum on the daily chart and the trend. This has been being sold for a long time, and you're getting a nice breakdown right here. So SLG is a really, really nice short right here, trading at 48.39. I would have no problem taking that tomorrow morning if it opens red. SLG, very, very important that you're getting that kind of action on it. And so when you want to take a short and you've got a Heiken-Ashi reversal candle, does the SPY super system tell you that the institutions are also in that? So here's TDOC. Are they in this? They are in this. They're selling this as well. It has a Heiken-Ashi reversal. If you want to change the Heiken-Ashi reversals on the platform, you just change the style. You go to your candle type, you switch from candle to Heiken-Ashi. There's your Heiken-Ashi candle right there, reversal candle there. We take a look at SLG. There's your Heiken-Ashi reversal. See the wicks here, and then a flat bottom, a flat top. I mean, that's a Heiken-Ashi reversal on SLG. A very nice short, and it's easy to find. I mean, I find these all the time, but I wanted to just kind of point out a few in what you look like over here. We take a look at PENN, PENN. Okay, this is fairly bearish lately, right? And let's see how we had a Heiken-Ashi reversal down, just basically a move sideways. Here's another Heiken-Ashi confirmation or a continuation candle to the downside. What's the institutions doing? They're all selling this thing. They're all selling this thing as well. So this is what you look for on here with these Heiken-Ashi reversal candles. Very important. And again, you want to confirm that anything that you look at that has a Heiken-Ashi reversal candle, make sure that the institutions are also trading it in that direction. Right? That's very important. If we look at like ExxonMobil, ExxonMobil looks like a decent bullish one. So what's ExxonMobil look like over here? Looks pretty good. Bullish across the board. Green and blue all the way across the board. Nice potential long right here. All right. So this is what you're looking for. Okay, does that make sense? That's what Heiken-Ashi candles are. That's how you can use them in swing trades, in intraday trades. You can use them on any time, basically in any time frame you want. I use them mostly on swing trades to find entries into good long positions or short positions. I think that they work pretty well. Okay, let's grab a quick drink of water here. And we'll continue. Okay, so those Heiken-Ashi candles. We looked at those. Now I'm going to take a look at some of the results we've had here. And then I'm going to show you how to use the SPY super system for intraday trades and for swing trades. And I showed you some already, but I'm going to show you how to use the indicators. And I'm going to go to some live charts to show you that. All right, so here's the trading room results in 2023. And these are all the trades that are in the room. 2,000 invested in each trade. If you took them all, produced us a little over 60,000. 5,000 a month average profit. 2024, 45.81, a little less. And again, a lot of the profitability is based on what the market's doing. If you get a trending market, you can make more money than in a choppy market. I think most people know that. But that was pretty good. 2025, this was through September. 47,765, a little over 50,000 now. 53.07, which is so far is the best monthly average that we've had since we started the room. Can I use it on a 2-minute chart, Arthur? Yes, you can. Yeah, you can use it. Heiken-Ashi candles. You can use it in any chart you want. The SPY super system is not going to work on every single one because there's so much calculations that'll be done. I use it just on the 5 and the daily, but I know it works on a bunch of other time frames. Let me see here. So that's the daily right here. All right. Let's see if the 1 minute. Yeah, it works on the 1 minute. And I don't go through all of these, but I use it on the 5 minutes all the time. I use it on the daily. 15 minute, not sure. Yeah, 15 minute doesn't do it. But I use it on you can use it on the 1, the 5, the daily. I mean, I only use, first of all, I don't use the 1 minute chart or the 2 minute chart. They're too noisy. It's too quick. You know, but if you want to use that, you can use it for your SPY super system trades if you want off the 1 minute and trade. Really scalping. I mean, that's what you're doing. You're scalping when you do that. Okay, so and again, this was results through 2025 so far. One thing I want, and I point this out, I guess it's because I was kind of proud of what we did here. This was back in April when they put the tariffs on and took the tariffs off. Market had a wicked fluctuations. SPY was down 10% in 2 days. We had 4 trades on in the room and in the alert service. Just these 4. We had Broadcom, AVGO. We get in for $75 a contract. We get out for $1.04, 39% profit. These were all short. Nike, massive profit in Nike. The tariffs really helped us when they put the tariffs on. We get in for $285. We get out for $9 a contract in this thing. 216% profit. This is not normal. We don't get these kind of moves normally, but we did take advantage of that, the tariffs. And then we had Sarepta short, 78% profit, and NNE short, 25% profit. Those are the only 4 trades we had on in the room and on the alert service during that particular period of time. All right. So looking through, I'll look through the last few months here. Hold on just a second. That. This was June. I was on vacation for a couple of months, but we only had 11 trades, 10 wins and 1 loss. Pretty good record. 37.90 in profits. Here's the trades. We had Sarepta as a loss. And listen, we have losses. Let's be honest here. Every methodology has losses. You can't be right all the time. It's impossible with the way the market is, how dynamic it is. But this was a pretty good month. And this is the kind of percentages wins you're going to see most of the time. 20, 23, 25, 42, 33. That's the normal percentages that we get on the trades that we take. And this was July. We had a lot of trades in July. This was a very big month for us, very big month. We had some losses. You can see the losses, but you notice 40%, 20%, 32, 52. This is the kind of consistency that you're going to see week after week, month after month on the trades that we take. Nothing too big, no big standouts. You know, if somebody tells you you can make 2, 3, 4, 500% all the time on trades. You can't. You're not going to be consistently profitable doing that. But July was a pretty big month. We had 33 trades, 30 wins, 3 losses, 91% win rate, this is really hard to maintain. But that produced 16,829 that month for anybody who took all the trades in the room with 2,000 per trade. Very big month for July. This was August. We had 20 and 4, 84% win rate. September, 21 and 4, 84% win rate. 2,000 invested produced 47.44. I didn't go through every single. These are most of the trades, but I don't go through every single month because it's too much. It's going to be the same thing over and over again. We do have losing months from time to time. We had one last September, a year ago September. Okay, so this was January. I'm going to skip through these. These are way back to 2024. I just have them in here. But to just show you what the percentages were, 20 and 2, 90% win rate. Here's the percentage wins. We have losses, sometimes 100, sometimes 80, sometimes 25. Just depends. Sometimes you get a news event that drives your options down and you can't get out for anything. But here's February right here, 92% win rate. Big month, 11,745. May, 88% win rate. These are time spreads. I had this on me because I was doing a time spread webinar on how to do time spreads over earnings, and typically earnings are right now. The earnings are they've been fairly busy in October. Obviously, they come the month after every quarter end. We had a lot of good ones in May, but again, 88% win rate. June, 86% win rate. The alert service at 92% win rate that month. But you can see the numbers here. Again, I don't want to bore you with all these things, but we're profitable just about every single month with a very, very high win rate. Here's September. This was last year. Here's our losing month. I do put this on here just to show you that we did have a losing month. 1786 loss on the room, 295 loss on the alert trades. Pretty puny, really. If you switch, it's 1786 loss in September, 7,448 win in October. The room went from a loss of 295 to a win of 6,000. So this is what you see. But again, you will have losses. It's really important to understand that any methodology, that even one that has a high win rate like ours does, 85 to 90% win rate, you're still going to have situations where they're going to go against you. You can't be right all the time, so you have to be prepared for that. And you can get 2 or 3 losses in a row. I mean, that could happen. This was November, again, 88%. And I'm not going to go over these. This was this year, January 2025. You can see the win rates. I just want you to see what the win rates are and how well this methodology works. Works really, really well. I just want to put something in here about the alerts. The alert service. What you get is you get an alert. This is what's going to be on the first alert you get. The date, the symbol of the stock you're going to take, what you're buying or selling. This is almost always going to be buying on this straight calls and puts. Buy, here's your April 11th, 67 puts. So buy the April 11th, which is your expiration date, 67 puts, that's your strike price, and here's how much you should pay for it, 285. Then after we've been in the trade for a while, you're going to get a sell order that's going to say, okay, it's going to say this and it's going to be sell order. That means put your sell order in for $9. Then you got to get one at the end that's going to say they were sold for $9 at April 3rd, right? So this is, and you could get some additional ones in here if we make modifications to the sell order before we actually sell. But there's what you get. Get the stock symbol, the option strike price, the expiration date, and the price to pay for the option. All right, and how do we get these results? I don't really need to even go over this. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish and bearish. That's when we take the trades, and that's why we get such a very high win rate. That's where the best comes from. Okay, and this is the SPY super system. How does it find these? I've showed you the indicators. It's looking at multiple triple screen assessment. This is looking at multiple time frames for momentum, trend, money flow. But momentum is the key thing here for that. Okay, so let's look at the charts again, and I'm going to look at some trades off of these charts so you can see how we take them. So you can see why we take them. And again, here's the chart. We looked at this early on. Here's the chart with the current time frame momentum, the multi-time frame momentum, the long-term trend, Here's your VWAP. This is a 5-minute chart. Volume weighted average price, critical. 15 EMI, critical. 8 exponential moving average, critical. These are the indicators that you use for support resistance level to get in and out of trades. Makes it pretty easy. We also have this template. If you do buy the software, you'll get that template and you'll get this template. This is a template for just folks who just want to do intraday trades, not interested in swing trades, just want to trade quickly on the futures, the SPY, the Qs, whatever. Any particular stock, you just get the current time for momentum because that's all you need. This is what that indicated, what that chart would look like. Here's your VWAP, there's your 15, and here's your current time frame momentum right here. Still has the pop signals on it. All right, so this was a trade we took in the Qs off the SPY super system. I wanted to just show you here the reason I put this up here, because these are Heiken-Ashi candles. I wanted to show you an entry with a Heiken-Ashi candle. Here's compression. You see the stock moving sideways. Here's a flat. We go from a wick and a tail to a flat top. That's a bearish Heiken-Ashi reversal, breaking down below the 15 EMA with the institutions going from buying green to selling yellow right there. This is where they switched from buying to selling. This is where you take the trade. And these are Heiken-Ashi candles. As long as the price stays below the 15, you stay in the trade, stay in the trade, stay in the trade, stay in the trade. I don't even know how far this went, but this was a very long trade. Very unusual to get a trade this long. But you can see right there where you would take it, and you can see why. The institutions are selling. Do they continue to sell? They certainly do. See how red that is? That's what you're looking for right there. All right. Now on the SPY super system trades, which are the ones that I take off of 5-minute candlesticks, which I can't alert on, and I can't even post in the room because they're too fast. But this was a year ago, July, I started this methodology because a lot of people in the room wanted to be able to take more trades. And you can't take a lot of swing trades off a high probability. There just isn't there's not a lot of ones that meet the criteria. You're going to have maybe 2 to 3 a week. But with this is how much I get in these months. And you can see how many trades there were. In August last year, a year ago, August of 2024, 56 wins, 6 losses, and 2 scratches. A lot of trades. And these things are producing really, really good results. As you can see, the win rates are great. And the thing with these trades are you're only going to be in the trade for a very short period of time. You only have one trade on at a time, and you need to watch it. All right, you need to watch it because they're going to be short duration trades. You get in and get out. You have to watch it the whole time, unless you put like a trailing stock on it, stop on it, or something like that. But typically, I watch them. And this was November, same thing. I mean, big wins, big amount of money. It's important to understand too. The reason I showed this was in October of 2024. This was the SPY super system trades. This is what my results were. Right? Nobody else. This is not anybody else's because I don't know what they could trade because what they traded because I can't call them out. I do call them out, but I can't post them and I can't alert on them. But this is the results I had. This is the amount of money I made in that. And this is the room. This is if you were in the room and you followed each trade. This is what you would have made, right? About $7,500. Because these are all posted and sent out alerts. It's important to understand that these totals and these totals are completely separate. This is not included in this. This is not included in that. These are 2 separate methodologies with 2 separate results. But people want like this, so I wanted to point it out. Right? And it's November, same thing, December, and there's the last quarter of last year, combined 42,000. But again, this was my results. I can't say that the people in the room got this because I don't know, because I couldn't post these. I know a lot of people are doing very well on it, but I don't know for sure. Okay, so here's some SPY super system trades off the 5-minute chart. This was a SPY super system trade back in 24. Again, this is before we had the 8 on here, but you can see the same information. Here's the current time frame momentum right here. This is what you're using for your 5-minute trades right there. Goes from selling to buying. You buy it right there when I get that arrow. All you're interested in is this went red to blue. It's breaking above the VWAP. The institutions are in. I'm getting into the trade. So you get in the trade right here, and you're getting in as it breaks above the VWAP and the 15 EMA, which is right here. So you're riding this. First, the VWAP becomes your stop. Then as the stock moves up, your 15 becomes your stop. And on the new chart, the 8 would be above there. The 8 would become your stop. So you're basically going to different stop levels based on how far this trades move. But you can see where this went. This was a pretty long trade, $220 profit per contract, which is a lot for a SPY super system trade. Most of them produce between about $70 and $100 a contract because the the trends don't usually last this long, but this was a pretty nice trend. So that was one here. This was it as well. This was one that was very quick, in and out, boom, boom, in and out right here. Again, we went to selling. We were looking to get in. The institutions went to selling. We were looking for a compression break. It broke right there. We took it there, and then we get out right there. Okay, those were Heiken-Ashi candles. Right, there it is again. Right, this was a SPY here. This was using the new template. Same thing, current time frame momentum right here, goes green, then it goes yellow, then it goes back to green. You take it right there and ride it right up. Okay, then you get out. You don't wait for these things to go back against you again. Once you get that far away from the 15, you take profits. And this is another SPY super system trade. Basically, I'm just trying to point out what you're looking for here. This is current time frame momentum. This isn't even not on there anymore. This is where the actual gear oscillator goes, but this is what you're interested in. Current time frame momentum. Institutions selling, breaking below the VWAP with a pop out of the box symbol. You take it there, you ride this thing down, and you get out right here. As it notice, it goes back to blue again. You got to be out of the trade, right? That was on the IWM, the Russell 2000. Okay, now I'm going to show you some charts of swing trades that we took using the same criteria so that you can see exactly what we're looking for and how we find these trades, and then we're going to wrap it up. All right, so this was an aligned trade. This was one that I actually had intended to be a swing trade, but we get into it right here. As you can see, the institutions were buying. See the green? You notice they went to selling right here on yellow. We took it right here as it broke above the below the VWAP, broke below the VWAP right there. Took it right there, and we rode this thing down, and after an hour, we were up 51%. I decided to take the trade off and take the money. You know, I'm not going to hold it overnight with that big a drop. Now, it was definitely bearish on the daily chart, so I could have swung it, but I didn't. I get out right here as it flattened out, and we're up 51%. Notice it went back to blue here, but you see it was selling the whole time across there. Right, stayed below the 15 all the way down. And this was URGN. This was a daily chart. This was a swing trade. We took URGN right here. It was compressing. The institutions were selling it, and then they went to buying it here. So what I did was wait for a break over this compression. You see how it broke out here? Took it here. Then it didn't really do much for about 3 days. It just kind of moved sideways. But I was fairly confident the institutions were still in it on the current time frame momentum, and also it was green here at the multi-time frame momentum. Institutions were buying the heck out of this thing, and then bam, right there we get this pop. 48% profit in about a week. But we were in it, but we had no reason to get out. There'd be no reason to get out of that. You were looking at your P&L here. You shouldn't be doing that. This is what you should be looking at. Okay, NVIDIA, another nice swing trade here. I think I showed this one earlier. This was a PBO, a pullback opportunity, right to the 15. Here's where you buy it, right there. Institutions are buying it. You can see that the institutions are buying it. We were waiting for the proper entry, which we got right there, and we get out right there. Nice trade, 32%. SMR, I showed this one earlier today. Again, a nice trade here. Institutions sell, institutions buy. You buy it here, you get out there. And this was Nike. Let me move this out of the way. I got something in the way here. Here you go. All right, so there's Nike. This was the one that I told you we did 216% on. This is where we took it. We're actually up money that day. Everything is great. You can see, are the institutions selling it? Yes. Anybody can see that. We took it here. It kind of moved sideways. Here comes the tariffs coming on. This is a gap down. We took the profits on the gap down. I do have something I say in the room all the time, is that gaps are gifts. If you're in a trade long and you get a gap up in the morning, take the profits. A lot of people want to stay in and try to squeeze out more money. They get greedy. And there's two reasons why you should take the profits right then. A, it's a gap up, so you're obviously up decent money. The second thing is the implied volatility in the option price when a stock gaps up like that gets elevated. And an elevated implied volatility raises the price of the options, raises the price of the premiums on the options. So you get more money right at the open than you would 10 minutes later if the stock was going sideways. If you get out and the stock was at 100 at 931 and you get out at 938 or 940, it's going to be less at 948 than it is at 931, even at the same price, because there's so much implied volatility in the premiums, it's going to drain out of there. That's why gaps are gifts. If you're long and you get a gap up, take the profits. If you're short and you get a gap down, take the profits. That's why we took the profits right here. We didn't wait around on Nike. Right, Sarepta, we were short here as well on Nike. Everything was being sold, obviously. So we just trying to find the best entries for these shorts. This was a long on HIMS, which worked pretty nicely. Institutions buying or selling, well, you can see what they're doing. Institutions buy right here. Okay, beautiful trade. Again, 25% profit. I actually had some runners on it. I made a lot of money on, but I don't count those in my results. All right, so those are the charts, and that's the SPY super system. That shows you the indicators that we use and how we know if institutions are in the trade or not, and how we use them for intraday trades and how we use them for swing trades. We do this every single day. I'm in the room every day from market open to market close, analyzing trades for folks. We're suggesting trades, looking at reasons why we're in a trade. Anytime we get out of a trade, I go to the chart and tell you why. If you have a stock that you're interested in trading, you just mentioned in the room, we'll bring up the chart on the SPY super system. We'll bring up the chart on TC2000. We'll talk about the setup on it and whether it's a high probability trade setup or not. So there's a lot of education that goes on in the room. I talk about a lot of technical stuff, and I have webinars and videos and all of this stuff. I have a very detailed webinar on trading the SPY super system on a 5-minute chart with using the 8 to 15 in the VWAP. Very detailed, about 50 minutes. All right, so here's again, we talked about what we take in the room: straight calls and puts, straddles and strangles, debit spreads, time spreads over earnings. We have applied materials on there tonight. I don't even know what applied materials is doing right now. Applied materials is down, yeah, it's down to about 213. It was trading at about 220. So it's down about $7. It's not that much for applied materials. And so we hopefully will take a nice profit in this in the morning. Right, and weekly ATMs, I talked about that. I've got quite a bit, a pretty good video on how those are done. It's really important to understand this strategy, but this is an excellent strategy that we take in the room and which you can learn pretty quickly to do. Credit spreads, and of course the SPY super system for very high probability trades. Right, those are the things we take. Now we'll talk about the offers here. Now it's important to understand that if you see an offer here, or you don't have something, you don't see an offer that you want for the time frame, whatever, you just call Rory, and he will talk to you about it. He can do whatever you want with that. But if you go into the chat box right now, I don't see any links. Should be some links in the chat box, but I don't see any. You can call Rory too. Oh, there it is. He just popped it in there. All right. So there's links in the chat box right now for these specials. Let's talk about them briefly here. Free trial. You get a free. You can join for a free 2-week trial. You'll get your text alerts. You'll be in my trading room. All right. You can be in there all day long for 2 weeks. You get to see the SPY super system in action. You can ask me questions. We can talk about any particular positions you're in or stocks that you're thinking of taking. I spend a lot of time answering questions from a lot of folks in the room. And you'll also get to look at all the options. I mean, all the webinars that I did, or the training videos that I have, about 32 of them. If you stay in the free trial and you don't cancel, it rolls over to $396 a quarter, right? After the 2-week free trial. So this is actually the most expensive way to get into the room. Then you have the alert service. This is what's called a one-time payment. This gets you the alert service forever, right? $24.96. You get the alert service forever. You get a Discord. There's a Discord room with 2 other professional traders in there that you can be in every day, and you get all of my training videos. All right. This one here is this is really good. This is a one-time payment. This gives you the trading room in the room for lifetime, and you also get the software for lifetime. You get the SPY super system software that identifies when institutions are in the trade. The software that we were talking about. You get that for life. You get the trading room for life. You get the Mastercast modules, or basically what's called my training videos. And then you get into the Discord room. $24.96 for all of this stuff. And that gets you this trading room forever and the super system. Just the SPY super system itself. This is a really good deal for just the SPY super system. Right, so those are those 3. Now we have a couple of other things here. This is the annual membership. If you want to get an annual membership for the SPY Super System. You get this software for a year. You get the scanners, of course. Anytime you're in the room, you get the scanners. You get the videos that I have on training. You get the installation for free. Always good. If you buy the software, Rightline is going to put it on your machine. They'll take over your machine and put the software on there. It's going to look exactly like mine. And you also get 1 month in the live trading room to decide if it's something you want to take. But this is if you want the software and you get an annual license on it, right? $9.98, really good price for 1 year. And then there's, of course, there's a one-time payment we just talked about. This is the one-time payment that gets you the SPY Super System software, right? And the training, the installation, and the options live trading, which is the same as this one right here. This is a one-time payment for the all-inclusive bundle. That gives you everything for forever. You get the room and you get the software. So these are really good offers right here. You know, this was the one to take advantage of. You can do it, but if not, this is a really good one too. The software for that price, $9.98. This is something I just did this a couple of weeks ago. I went back and I looked at our results in the room and on the alert service, especially in the room, and what the return of subscription investment. Now, this is not what you put into a trade. This is if you paid the annual subscription rate, which $1,600 is the most you can pay for an annual if you do it quarterly. The average trade size, $2,000 per trade, assumes all trades are taken. The historical results has been the return on investment, the investment being a subscription investment, is 40x, 40 times. You're getting your investment back 40 times per year. That's pretty big. Annual profits have exceeded 40 times the subscription costs, and the subscription has consistently paid for itself many times over. So it's got higher return on investment, simple math, obviously, and proven results. And of course, past performance is not indicative of future results. You always have to say that, because there's no guarantee that when you're trading, you're trading. You're the one pushing the mouse. You're taking the responsibility. But this is what over the last 4 years that it's done. Okay. And if you have any questions, you can call Rory 786-732-4656. Put your name and number in here if you're interested in having Rory give you a call back to talk to Kim about any of these deals or any questions that you might have. And I appreciate everybody being here today. I appreciate you giving up a Thursday afternoon. Most of you, I imagine, have been trading today. So I look forward to seeing some folks in the room or on the alert service and working with the software. If you come into the room, just give me a shout out. Let me know. We'll talk about the software and answer any questions that you have. Okay, so have a great evening. We'll see everybody hopefully in the room. We'll see everybody on Friday, and enjoy your evening.